Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 19th of February, 2022, and it's the weekly technical analysis for spot gold and dollar yen for the fourth week of February. Let's begin with spot gold, and you will see a big bullish candle on Thursday that broke through the resistance zone that we had marked last week and punched through it very convincingly, and looks like it's targeting even higher, and this is a critical round figure at the 1900 level. Let me just change all these colors. This was the 1850 area, and this was the swing high. This is swing high here. Recent swing high at the 1862 and change that formed the resistance zone. Change this one here as well at 1800. And another one here at the 1830. Okay, so it did pull back after testing the resistance at the swing high on the Tuesday. Did reach that after breaking out of this upper trend line of the larger symmetrical triangle. And after the pullback, continued to recover on the Wednesday, and then finally broke through on Thursday because the tensions at the Russian-Ukrainian border is still high, and situation is still unstable, and that drove a continuous flight to safety here with a safe haven trade, and then paused on the Friday. Now, if we can actually move this fib here to show a reversal, bullish reversal move, and you can see that it targeted the 162 fib extension. That was the 1899, and eventually did spike through to set a intra-week high and an intra-year high at the 1902.49. So we'll see if there's further bullish moves for next week. Let's switch to the weekly time frame, and you can see that it's coming up to test this swing high area. So let's look at the weekly bullish candle here, 2 consecutive bullish weeks after a bounce from the support level at the about 1790 area. Let's see if we can also find a potential target for the next high, and it's past this swing high here. So this swing high is at the 1916.60. Let's go back to the daily time frame. Okay, so this swing high here, it will now turn to our support zone. Can move this up here to our resistance at the 1916. Okay. So it needs to punch through the 1916 just to hit the 138 Fib extension of this reversal, bigger time frame reversal to 1925.25. So we'll see if it's able to get there. So very strong move, and let's also add the recent reversal move here. That's where it stopped at the 162 Fib, and there is a confluence with the 138 Fib, and that's at the 200 Fib extension of this smaller Fib reversal. So that could be a potential target area as well, up between 1925 and 1927. So that's also possible target zone. But we'll see if that will continue. Okay. So after such a bullish move, there could be a pullback just to retest this upper channel trend line, and then perhaps attacking the 1916 level. Not sure if it's able to extend further than that. We'll have to see next week, and as well as the coming weeks. Let's extend this to see if this upper channel trend line will hold as a support. Otherwise, there's still this support zone now between 1877 and 1882. All right, so this coming week, a number of news, but nothing major. Flash PMIs, prelim GDP, and Friday could possibly be the more significant one with the PCE price index, durable goods, and then the revised University of Michigan consumer sentiment figure. Okay, let's also take a look at the US dollar index, the DXY. Let's take a look at the US dollar index, DXY. And it did try to climb up higher at the start of the week on Monday, but pull back into the support until Friday, then managed to recover and bounce from the support here at the just above the 138 Fib extension, which there was a previous support level here. This previous swing low. So it has managed to bounce above that and climb back up above the daily 55 EMA. But it has not been able to break out higher above the 162 Fib. So it has remained in tight range as well as the other major pairs. So still stuck within this rectangle. Okay, and it's in a about the 70 pip range. So it's still right in the middle of this range between the upper resistance up here and as well as this lower support. Let's extend these levels here. Okay, so it needs to break out of this box either way. Breaks out higher, then it can attempt to test this previous resistance. Otherwise, if it breaks down below this support level, then there is a possibility that it could test this swing low, and further below that, the critical swing high, previous swing high here at this 100 Fib. So it's no wonder that all the major pairs were consolidating as well, because the US dollar did not gain any traction, nor did it suffer any bearish movement. So let's move back. Let's move on to dollar yen, another safe haven currency pair with the Japanese yen being bought up as well, and that's driving the dollar against the Japanese yen lower. And that also was triggered on the Thursday, same as spot gold, accelerated down to the support zone at the 62 Fib extension, or rather it's a 38 Fib retracement of this swing move up. That's a 38 Fib retracement, and along with the round figure level at 115.00. Let's change these as well. Okay. We may need to add one more round figure now. In case down to the 114. Which is aligns with the 62 Fib retracement. So that's just nicely aligned there. Let's move this support back down. There's another support at the 50 Fib retracement. And in case it breaks as well, there's a further one. But for now, let's leave that there. So it did not threaten the previous week and the resistance level after this double top. So for now, this is still the intermediate resistance zone at the 21 Fib. So we take a look at the weekly time frame, and you can see it's slipping lower, just touching the 10 simple moving average. So it could continue to drift lower. That's why the 50-pip retracement could be the next support zone target. And it needs to break down below the daily 55 EMA. Okay, and there's a swing low support area that's around the 50-pip retracement. Okay, so likewise, there's a similar exposure to the US dollar news or US news, US economic news. But looks like it's just drifting lower and taking its time though. It's did not move that much. It's only within about 110 pip range for last week. All right. So do check out my other video on the major pairs, and have a safe week and a good trading week, and cheers for now.